Let's introduce a very special guest who is now joining us on the show. We have Mr. Keki Mistry, Vice Chairman and CEO at HDFC Bank. He's joining in on the sidelines of the ICICI Securities BFSI conference. Great to have you with us on board as always, Mr. Mistry. Thanks so much for joining in. I'd like to start off by talking about, a matter that seems to be bothering the markets of late with respect to the crisis that we're seeing in the NBFC space. And you'd gone on record to say the timely repayment by the NBFCs will help to regain that confidence. Can you just elaborate as to how you've read into the situation so far and how you see it shaping up?
Well, I think the problem really emanated with the problems that one company, IL&FS, faced, and that created a lot of risk averseness in the market. And then people started looking at the balance sheet composition of many of the NBFCs and started finding that many of them had funded themselves through short-term commercial paper, 2-month, 3-month, 6-month commercial paper, and that created long-term assets, and that created a fear psychosis in the market. Now, increasingly, we have seen over the last 3 weeks or maybe even 4 weeks that all these commercial papers that came up for maturity have all got repaid or rolled over on time. So there has been no default that has happened in the system. And I think that by itself has given a lot more confidence to the market today than was the case in the third week of September when the crisis really erupted. So confidence level today is a lot better, a lot higher. Money is available today. The complete risk averseness that we saw in the market 3 weeks ago, 3-4 weeks ago, I think a lot of that is behind us. I don't think things are normal as yet, but they're getting towards some degree of normalcy. And I think over the next 2 or 3 weeks, as more of these commercial papers mature and get rolled over or repaid on maturity, I think the confidence will then come back into the system, and I would hope that in a couple of months' time, it should be pretty much business as usual for most of these NBFCs. Though, having said that, many of the NBFCs would have suffered some impact on growth, because over this last 1.5 months or so, many of the NBFCs have significantly slowed down on their disbursements.
Mr. Mistry, it's great that ICICI Securities is holding this BFSI conference for investors, because there's so many concerns plaguing the sector per se, and it's also great that you're part of the conference, perhaps bringing about more clarity on the way ahead for the financial sector and the health of the financial sector per se. Give us your own sense on how you see credit growth picking up from here. We get so many data points to look at every single day that it becomes very confusing to assess which way would the RBI tilt in the next policy meet. For example, look at the inflation number that's come in yesterday at a 13-month low. Clearly, one of the key parameters for the RBI to move on rates is core CPI, and there seems to be no major concern on that front as of now. And of course, rates are a key determinant on how credit growth trends pan out. So what's your outlook thereof?
Well, my outlook on growth and I'm talking of the financial sector per se, I'm not talking necessarily of any one particular subsector within that, is that the demand for financial service products in India is very structural in nature. NBFCs and banks provide the funding. NBFCs have are niche players, have a niche market, are able to provide a lot of niche services that some of the banks are not able to provide, and therefore will continue to have a future in the months and years to come. Now, as far as interest rates are concerned, clearly, inflationary pressures are not there in the economy at the moment. The inflation numbers clearly seem to indicate that inflation is extremely low. And therefore, my sense is that there will be a further pause by RBI at the next credit policy round, and we do not see interest rates really move up. We've actually seen that the 10-year GSEC rate has corrected, has come down about 15 to 20 basis points in the very recent past.
Right. And Mr. Mistry, it's important to understand that, while things are picking up...
Yeah.
Oh, sorry, you were making a point, sir?
No, I was talking about housing.
Yeah.
I was saying
No,
that I was talking generally about the financial sector, that the demand will be strong in India, but for housing it will be even more stronger.
And you don't think that, you know, the shadow of doubt that the IL&FS issue has laid on the sector will drag its feet over the course of the next, let's say, 6 months or so? I know you've said that it brought to the fore a lot of the risk that could unfold within the financial system, but enough has been done to arrest the problem for now?
I think IL&FS was one stray incident. I'm sure we are not going to have a repeat of an IL&FS, and I think there is enough strength in what we've seen over the last 3 or 4 weeks, that the short-term liabilities of NBFCs have been met and have been met successfully. And I'm confident that going forward over the next 3 or 4 weeks, as these commercial papers keep maturing and these keep either getting rolled over or start getting repaid on maturity, the full confidence will come back into the system. And if the confidence comes back into the system, then as I said earlier, I think it should be pretty much business as usual in maybe 2 to 3 or maybe 4 months' time. IL&FS was a one-off incident, and I don't think we should equate IL&FS with anything else that is happening in the financial system today.
But what do you hope from the regulator? I mean, do you expect more steps to be taken to provide a conducive liquidity environment for growth from the RBI and the government working together?
I'm sure that the regulators, whether it's the RBI or for that matter the government, is cognizant of the need for growth in the economy and will ensure that there are adequate steps that are taken to ensure that enough liquidity is provided in the system to ensure that the growth keeps happening. It's just that the last 1 month has seen a bit of slowdown in disbursements, which has largely been accentuated by the fact that many of these NBFCs had short-term liabilities, and because of the risk averseness that was there in the market, these liabilities were not getting renewed on maturity, and therefore people had to scuttle around for more money. But as I said, that phase is now behind us. Confidence has come back into the system. Banks, amongst others, are beginning to lend money and lend money in a big way. So it's the banks, it's the life insurance corporation, it's the other entities within the financial system which are now providing the liquidity that the system really requires.
Right. Mr. Mistry, I believe you have to leave us. I just have one more question, which I think would be on the minds of a lot of investors attending the conference as well, is this whole thought of market share migration because of the problems that NBFCs have faced, including housing finance companies. There is a sense that, one would move towards a regulatory regime, a stronger regulatory regime under banks, and that they would be able to capture a greater share of the credit market from NBFCs. Do you see that happening? While you're saying that confidence will come back and there will be a resurrection on that front, do you feel that in the near term to the medium term, there could be that scale back in growth for NBFCs, which will be a blessing in disguise for banks?
I would say that for the last 1 month and maybe going forward for the next month or two till complete confidence comes back into the system, the disbursement growth in some of the NBFCs may weaken a little bit. But having said that, as I mentioned earlier, in 3 to 4 months' time, I would expect full confidence to come back. And I think NBFCs have an important role to play in the financial system. They are niche players, they have a niche role to provide, and I think they would continue to have a big role to play in the times to come.
Mr. Mistry, a quick word on how we've seen the composition of your loan book at present and what the growth outlook is.
Well, we see no change in our growth outlook. We never guide the market towards growth, but we have continued to see good growth, very good growth. We had our second quarter results, which were declared just a couple of weeks ago, and we had 18% growth in our individual loan book. So the growth continues to remain extremely healthy. The housing market in India offers enormous opportunity for growth, emanating out of the fact that housing today is a lot more affordable compared to what it used to be 20 years ago, or for that matter, even 10 years ago. Secondly, the penetration level of mortgages in India is extremely low. The mortgage to GDP ratio in India stands at 10% compared to something like 63% in the US or 68% in the UK or 22% in China. Thirdly, we have a young population in India. 2/3 of India's population is below 35 years of age, and unlike the West in India, people go to buy a house only when they're in their late 30s. So with 2/3 of the population being below 35 years of age, it means that 2/3 of the population has not even thought of buying a house. But over the next 1, 3, 5, 7, 10, 15, 20 years, all these younger people will get to an age where they will necessarily have to buy a house. So there will be a structural growth or structural increase in the demand for housing loans in India. And last but not the least is the focus that the government has put on the sector, by giving fiscal benefits, by having the subsidy scheme which is now in full play now. So all these factors taken together will ensure that the growth for housing loans in the system will remain strong for a very, very long time to play. And as an important player in the financial services sector, we continue to remain confident of our growth.
Thank you so much, Mr. Mistry, for joining in. I am aware that we extended our appointment with you, but we tried to squeeze in as many questions and garner your expert view. That's the view coming in from Keki Mistry, speaking to us on the sidelines of the ICICI SEC BFSI conference, talking about growth parameters, how IL&FS, the crisis was simply a one-off, and there has been NBFCs, confidence level today does seem a lot better, a lot higher. He believes in terms of the RBI policy that we could potentially see a pause in the next policy, and as CPs start maturing, we will see confidence coming back into the system within the next 3 to 4 weeks itself.